Good day. It's Thursday, December 2nd. I'm Martin Gago with Market Radius Research. Today, we've got Executive Chair Gary Yeoman and CEO Jim Albertelli of Voxtur joining us. Voxtur is a real estate technology company providing tax solutions, property valuation, and settlement services throughout the lending and transaction lifecycle for investors, lenders, and government agencies. I'm an investor of Voxtur and have Voxtur on the call for several reasons. Voxtur's management team has a long, successful track record within the real estate industry. To succeed in real estate infrastructure, I believe you need to have deep domain expertise and experience and a proven successful track record, which they have. The real estate infrastructure industry is highly fragmented, complex, huge, and still running a lot of old antiquated systems, making it ripe for technological disruption and consolidation. While Voxtur even grabs a small share of this market, this company could be very big. And if they capture a significant market share, this company could be huge. While there's definitely risk, I think the potential upside is massive. And I think this experienced team has a good shot of succeeding. But remember, this is neither a recommendation nor investment advice. We're here to learn about the company, do your due diligence, and come to your own investment conclusions. Gary and Jim, thank you for joining us again. And let's start off the presentation. Let's get a bit of an overview on yourself so we know who we're dealing with here.
Okay, and thanks for having us. So thank you everyone for joining in on the call today. Much appreciated. What I'd like to do today is that I'll give you a brief introduction on myself and pass it over to Jim. I will then move forward and give you an overview, a high-level overview on strategy and vision of the company. And then I'll turn it over to Jim, who'll do a deep dive with respect to our individual businesses. We're hoping that whole presentation tops will take 30 minutes. I think that's absolutely incumbent, and hopefully I'm right, that the insight will be garnered not just from what we give, but the questions that you have. And we'll be able to obviously be more pertinent in those areas that are more of interest to the listeners. So with that overview, and I think that time worked for you, Martin.
That's great.
Okay, so then I'll just do a quick overview of myself before I pass to Jim. Obviously, my name is Gary Yeoman. I've been in the real estate business for close to 40 years. I was a former head of real estate, director of real estate for Magna International, the largest auto parts manufacturer in the world. I built 40 million square feet for Mr. Stronach while I was there. I oversaw all the buying, the selling, the leasing, the taxation, everything to do with real estate in Magna. During the high points, I was starting a new building every 3 weeks. So it was a massive opportunity. And our buildings back then were averaging 250,000 square feet and up. So it was a great introduction into the real estate industry. From there, I started my own little business out of my house that, as you all know today, is now known as the Altus Group. It's a close to $3 billion company. Everything that is in Altus today, with the exception of Reonomy, that was just purchased by them, were businesses that I had acquired, built, and developed myself. Get a deep dive into the real estate industry, and very, very, satisfied with how that has went. A lot of gratification there. While I was at Altus, I also put the first $10 million in to start Real Matters. I helped them draft the business plan. I raised the first $10 million. I landed in their first client, which is the Bank of Montreal, and I also sat on the board. That company, at its peak point, went to $2 billion plus. So another, a good fortune of success. I came into this company, meaning Voxtur Analytics, formerly known as iLookabout, and took over as CEO in 2017. Put $3 million of my own money into this. At the time that I took over, obviously the market cap was extremely small, $10 to $12 million. And we've taken it from that, kind of 10 cent region into what it is today, that floats in and around $1 a share. And obviously, the market, as everyone knows it, is up and down, but, it's been a great success for us. And the success is yet to come as far as where we're going to achieve our biggest gains. I'll now turn it over to Jim, and Jim can give you an overview on himself. Thank you.
Yeah, certainly. Thank you, Gary, and appreciate everyone's time today. Good afternoon. My name is Jim Albertelli. I'm the CEO of Voxtur. I'm really fortunate to lead such a team of domain professionals throughout the real estate life cycle, from origination to liquidation, from technology to domain expertise and tech-enabled services and valuation and assessment and then title, and then what we're doing really as part of our strategy that Gary will go into. My background started at finance and economics, my business school background, went to law school at Emory. I started my own firm shortly thereafter, about 25 years of being a real estate practitioner. I built up a multi-state real estate law practice that represented the largest financial institutions in the US and the GSEs. So great familiarity with the navigational beacons, the buoys that are out there that we have to work within to be able to be successful in these various aspects. I also built the first eBay style auction for distressed real estate in early 2000. Built the first mortgage originator and servicer that focused on mining social media data. I ultimately sold that to Cerberus Capital Management. So I've been in and around the technology space that focuses on real estate as an asset class. I've focused some attention on the mortgage finance, understanding the origination, the servicing, and the capital markets components of real estate finance. And I've built complex processes at scale and had the benefit of building some tremendous teams throughout my career. And so I'm great, just very fortunate to have an executive chairman with the background that Gary Yeoman does, his expertise, his leadership, and his vision. And I'll turn it back over to him for him to outline all of that for you. Thank you.
Okay, thank you, Jim. So what I'm going to attempt to do is to describe fairly briefly, what we do and what that could mean to us as far as market size and market share and capitalization. And then with that, and having some clarity and I'll simplify it as best I can, but subsequent to that, then I'll turn it over to Jim, and he'll go into greater detail on how we're going to execute. And one thing is to be ingenious, to have strategy and have vision and have the capital to do it. The second thing is to take someone of Jim's talent and experience and be able to manifest that into success. And to be perfectly clear, we're in business to make money. Everyone talks about tech and everyone talks about revenue growth. We're going to get all of that, but ultimately the prize is what is your profits? And I'm absolutely satisfied that they were just around the corner from achieving that. But let me get into an explanation of what we do. And for those of you that are listening today, to the extent that we haven't covered the areas that you want, we're going to leave plenty of time to be able to execute and give you the proper, hopefully the answers that you need to bring clarity to where we are. So we have three fundamental businesses right now. We have a valuation business, we have a title and settlement service business, and we have a property tax business. And let me start with property tax first. Property tax, historically, of what we've done is focus on governments, municipalities, counties, provinces, states, etc., and provide analytical services on property tax. And that right now is the equivalent of about $11 million a year, to be $15 million a year with a new contract that we're getting with the province of Ontario. But again, very muted, because we've been kind of using the platform that we're building more as a pilot project to make sure all the kinks and the bugs and the whistles are out of it. And it's been introduced to the industry here in Canada with absolute, excellent reviews in every shape and form. But
Eric,
essentially,
sorry to interrupt. On the property tax business, that's largely, or is it exclusively Canadian right now to sort of test it out, and then, or do you have existing US business?
yeah, so there's two parts to our assessment property tax business. One is that we provide imagery, we provide desktop valuation services, and we provide mobile applications to provide assessment services to the county, to the counties and municipalities and the provinces. The second aspect of our business is called real property tax analytics, or confirm your assessment, and that is a predictive analytics tool where we tell you whether your property taxes are too high, too low, and by how much. So it's segmented into two parts. We're currently in about 50 major cities, across the U.S. extensive involvement in Florida, but we're all over the U.S. in many of the states, and so it's not in wild abandon yet, but it's certainly gaining a significant amount of steam. I think collectively with the U.S. business and the Canadian business, and Jim will stand me corrected, but we're probably somewhere in the neighborhood of between 15 and 17 million annually in revenue. So it's very small right now. But let me just put some perspective as far as what we're doing on tax. Everybody that is on this call today, I'm assuming most people own real estate. And most people also realize that after debt service or mortgage payments, your property tax is the largest expense that you have. And most people, because they don't understand and don't get involved in reviewing taxes, they get the tax bill every year and they pay it, and there you go. I find it amazing that you spend more time analyzing whether you buy President's Choice or Jiffy peanut butter, what brand you want, than you do with your largest expense. So if you can envision this, for the cost of $19.95 a year, subscribe, so it'll just roll over every year, we will give the subscriber a 6-page report. We will tell them whether their property taxes are too high, too low, and by how much. By doing that, we're giving them comparables of properties that have sold, properties that are not sold, but how they equate in equity with the subject properties under review. We got aerials, we got pictures, but most importantly, my proprietary algorithm was built on how assessment tribunals determine in a court how do you determine what is fair and what a proper assessment of taxation is. So to give you a magnitude of what that business will be, in the US alone, there's 150 million residential properties. If 10% of the marketplace decides that they want to know whether their taxes are fair or not, and in the last 3 years, I haven't found one person said they don't want to know. So we do know that just on 10% of the market taking this will generate $300 million a year with at minimum of 95% margins. So it has an enormous potential for revenue growth, and we will be rolling that out in early 2022. What makes it so viable and real is we became fortunate enough to get to meet an individual by the name of Ryan Marshall, who, aside from being an incredibly individual, an ethical person, a great businessman, but his business manifests itself into making everything possible for us in what we're doing with our rollout of our business. Brian brings with him the full depth and breadth of all of the core logic data that he has right entitlement to from going back 10 years ago, an antitrust case that was awarded him that opportunity. With his AI that he's built for business retention and lead generation, working with the real estate agents, working with the brokers, to have us having the opportunity to have access to that data, and including assessment of taxes and physical characteristics. It makes this business possible. So we're so excited about the opportunity with Ryan on board, not only with the fact that we can improve his business, but I've just talked about the B2C side, which is to you, the consumer. But every mortgage company out there, every loan company out there, most people realize that they are also signing off on you, the owner, on your behalf, as trustees, as fiduciaries, to pay the taxes. Yet they've done no due diligence at all, whatsoever. And so they're paying taxes and they're getting sued because they're paying taxes that are inappropriate, and they're obligating the owner of the house to pay these taxes by them signing off. They don't want to have any more part of it. We talked to 5 major lenders that said, give me this product, we'll take it tomorrow. So we do know that at 10% of the marketplace, we've got a 300 million revenue possibility with the B2C. We got another $250 million opportunity from the B2B, being all of the lenders. And then we continue to roll out the B2G, which is to the government, so they can use that platform that we're building as an audit tool against assessments they return. In Ontario alone, in Canada, the government pays $75 million a year just to fight assessment appeals. We can mitigate a good portion of that by enabling them to deliver proper, fair, equitable assessments and taxes. And so this is a massive opportunity, but the most important point I'll leave you with is that no one is doing this, on the planet Earth that we know of. It's 40 years of experience understanding how courts dictate what is fair, what is not fair. Our proprietary algorithms, coupled with the data that we're getting, we have access to all of the MLS data from Mr. Cooper and Zoom through an acquisition we have. We have the CoreLogix data that we're getting with Ryan's acquisition of Benutech, and that should close any day right now. And then obviously we have other accesses to data, First American, et cetera. So we think that we have the most comprehensive database, in North America, or one of the most. So we're happy about that. So that's a tax on a high level. With the valuation business, everybody knows today that the technology that is offered in valuation is basically archaic. Do you know today to go to a bank and make an application for a mortgage, it costs you $800 and up to 20 days to get an answer back? And within that 20 days, there's so many things that can happen. There's expenses that that the lender has to go out and try to, determine and get access to title insurance. He has to, take the risks that hopefully the house is worth what what they've said it's worth as far as what they're paying, and they got to assess the reliability of who is the the owner, and what is the likelihood of him being able to make those payments. What we've done is we purchased a business called ANOW, which is the only fully digitized AI encrypted workflow appraisal platform in North America. We just landed our first major client with United Wholesale, and they're doing 70,000 transactions a month. And so you take as a comparison Real Matters, who is kind of the beacon that people follow, they're only doing 15,000 transactions a month with all of their clients. So we're able to provide a platform that is not only using JSON files, so it's fully up to date, but we can deliver a platform right now that is 5 times quicker and measurably cheaper. Our overall goal is to fully populate those appraisal cards, to roll out an insurance wrapper around those to guarantee the values so that the lender won't be out of pocket if we made an egregious error, and to get the appraisers to sign off, but they can do that and do up to 50 a day versus the 1 a day they're doing now. So the market size is almost immeasurable. We know that there are $4 billion being done just in the appraisal business alone, but ours is much more than appraisal. Ours is appraisal, is default, ours are foreclosure, ours are refinancing. So the size of this market is immeasurable. And so having that only fully digitized platform, and we've already started with one of the biggest, the best in the industry, extremely excited. And so I'm giving you the highlights of technical. Then we move to Jim's, and I'm going to take very little time because I'm going to pass it on to Jim. But this genius here has come up with an alternative to title. Right now, the average title insurance today is regulated based on the price of the home. The average cost in the U.S. is $1,500 a year. Jim has built a platform, patent pending, that basically can take you outside that regulated price market and offer title insurance for $500. And so when you talk about who we are, we're bringing technology, and we're bringing knowledge and information in the industry, but we're doing it affordably, we're doing it quicker, and we're going to have more accuracy because of the profound access that we have to information. The last piece that I'll bring out before I turn it over to Jim is that once we've got all of these platforms that we own and that we've built, and each business that we own is a minimum of a $500 million business, as far as revenue. Each business that we own can generate that. But think about this. If I take assets and I put them on a private encrypted distributed ledger, and I say to whoever's putting these assets on, which is every bank that has, high net worth clients, every, family office that has high net worth people that they minister, put their assets on there. And if I was to spit out a value for them every year in January, that they could turn around and say, if I want to buy or sell a property, because of Ryan and Benutech, we could find out who the best, agent is and the best broker to help them facilitate a transaction. If I did a property tax review for them every year, because you should do it because that's your biggest expense. If I wanted them to get competitive bids on insurance that no one seems to do, and we rely on our broker, but we hope, but we're not. If they want competitive bids on grass cutting and snow removal, on pool service, on pest control, we're doing two things. We're bringing an opportunity for owners of assets to bring, some integrity to the operation, where it's a major contribution to prevent elderly fraud, where where the assets are being owned or being taken care of. Go to any bank, and that's the biggest concern they have. But all we're doing is repurposing the assets that we have. And that will be rolled out in early 2002. Again, largely with the contribution of Ryan Marshall and Benutech, along with Ross McCready, who was the former owner of Sotheby's in Canada, Pacific Union in San Francisco, and sold to Compass, where he's the CIO in Compass. So he's going to oversee that. So a massive opportunity for generating wealth there. I'm going to turn it over to Jimmy, who can give you a little bit more in-depth overview of the individual businesses. Then happy to turn it back to you, Martin, and field the questions if that works.
Great.
Thank you, Gary. I appreciate that. It's always tough to go after an executive chairman as dynamic as Gary is, and definitely as prolific his experience. I'm going to do my best to bring it and to create synthesis for you, but at its very basic form, if you distill it down, you have verified data assets in an end-to-end encrypted data mesh architecture that is optimized for the nature of the data, that is then deployed to address inefficiencies in governmental enterprises determining value, mortgage companies determining value or transacting in a highly malleable GUI environment to address those. So what we try to do, or what we do, is actually create technology solutions that create new efficiencies. The efficiencies, and as Martin mentioned in his initial remarks, he mentioned the domain expertise. What's missing from some of the property tech world, when you look at it and you say, well, why hasn't this company achieved what it could? I think, again, it goes back to Gary's deep domain expertise to build a multinational ICI, industrial tax solution company like an Altus. That experience in going through multiple jurisdictions around the world, including North America, gave him a unique position to be able to create a real property tax analytic tool that he created and is deployed in the provinces of Canada. It gave him the opportunity to identify inefficiencies in the process, the lack of mobile architecture for municipalities, the lack of a synthesis around all of the data necessary for municipalities to create a value that stands the test of time and comparison. Gary did that. So having that knowledge and now marrying that with the residential data that he mentioned and the data architecture that we've built allows us to create and to attack a 150 million homeowner, let's call it, total addressable residential market, wherein, because of the law of large numbers, a small percentage is worth hundreds of millions of dollars of revenue. The data is already acquired, purchased, and assimilated. Now it has to be deployed. So in that deployment, we can sell it direct to the consumer. We can sell it to the title companies who, up to this point, just take a tax bill and apportion it between buyer and seller. We now can have a validated tax bill. We take it to mortgage servicers, like Gary mentioned, and have the ability to sell it to them. So you can see from the tax proliferation, Gary's vision of B2B, how simple it is really to go B to consumer, right? B2C. That's what he's outlined. And our data architecture, data mesh, our verification of data allows us to do that. And then maintaining the malleability of the APIs and the front end GUI, already knowing what questions are being asked, allows us to answer them rather than put people into queues or just create new workflows. These are actual technologies that know the question and the answer, and then tee up the answer to create even greater efficiencies. That's the tax world in a nutshell. Valuation, Gary hit on in the valuation world. And one of the questions, actually, I got a question from an anonymous attendee, and it was, how do you assimilate all of these technologies, are you able to pull them all together? Well, in our vetting process, we look for a number of things, and we really have, these 4 tenets around acquisition philosophy. We talk about the property. We talk about it being in property technology, so technology. We talk about EBITDA positive, so adding to the EBITDA. Gary mentioned that all of us hearken back to a core tenet that we should grow exponentially and make money, be responsible both to the future growth prospects, but also be very respectful and mindful of today's investor, and maintaining the strength of our balance sheet, right? So the profitability and then synergy. And so the synergy is that last component. So how do you define that 1 + 1 = 3, 4, 5, or 10? Well, we do that with the acquisition of these data assets. So if you look in what we did with the acquisitions that we accomplished in the valuation space, a tech-enabled valuation technology from Xome, the technology that we had prior to the merger that created Voxtur, and then, which was called Clarosity, and then layering on the first end-to-end encrypted, AI-enabled, route optimized, technology for the delivery of an appraisal. So route optimizing the human capital, digitizing it, creating data elements that are customizable for today's report and 10,000 days later data analysis, right? Thinking about not just tomorrow, but 10,000 tomorrows. That's what we did. All of those core tenets were common in each one of the companies that we've assimilated. Each one of those core tenets was common, and as was our evaluation of culture, the piece that I didn't mention in the 4 tenets, and their innate architecture. For example, the Microsoft stack in an Amazon cloud environment, the thoughtfulness of the technologist, the nature of the programming, the nature of the controls, and the strength of those controls, because we serve the largest financial institutions and government enterprises. So it's really the conflux of all those components that allowed us to capture the work at the #1 or #2 wholesale lender in the US. And it's also a testament to our flexibility and really our agile strength that we will be able to, in parallel path, contract with that large financial institution and deploy within 12 weeks. So within 12 weeks, we went from 0 contract and a phone call to a deployment. And during that time, we also managed to recruit 6,000 human beings, which is not our core strength. So we did that in parallel with our client to put those people in the Voxtur environment and be able, those people being appraisers, and be able to deploy that and scale it up as quickly as we did. So I think that's the testament a little bit about how we pull it together. And so how can we do that? And can you expect improvement in the margins? Of course you can, as the software as a service, both from a subscription perspective and the software as a service as a use case perspective. Think the snowflakes of the world. Think the more you use, the more you get paid, and how easy it is for that to be adopted by consumers. And as we really execute both of those strategies, we actually increase our bottom line. So more SaaS, it's closer to what I call, in air quotes, the Adobe Acrobat special, right? That 75 to 80% gross margin. So those margins will continue to increase as the technologies proliferate. The tech-enabled services are your laboratories that highlight inefficiencies that are then addressed in a total addressable market. For example, tax, with the municipalities opening tax for consumer, or valuation technologies being provided to services providing to servicers or originators, then turning into technology platforms that are assimilated to create new models of how you deliver an appraisal. And the same, similar in title and settlement services, being thoughtful about how you actually transact and close a loan allows us to look at the constraints in the marketplace, whether they're data, technology, or regulatory, and then take each one of those fibers and create a new cord that allows us to reduce the cost of home ownership, which all across the Watchtower we're doing as an enterprise. And so I think when you take a step back and you think about the company and what it allows us to do, the B2B and the B2G, the B to government, allowed us profitability, highlighting the challenges in the marketplace, the inefficiencies, allowed us to assemble the team, the IP, the internet, the intellectual property protection, create scale, and then have all the building blocks to then attack the the consumer component, all the building blocks to price assets in a distributed ledger, maintain that value into the future so that you always have an eye and clarity on the value of those assets. So I think when you take a step back from Voxtur, data as a service, ask and answer the question and simultaneously do it in an end-to-end encrypted mechanism, do it with an elegant client delivery because we understand the challenges of our clientele deeply and intimately. You heard about Gary's background, my background throughout this space. And that's the hidden special sauce of Voxtur that some of the other competitors don't bring. Someone, one of the questions that were asked was, person from Europe said, what's the biggest risk to your business? I think that in some areas we have IP protection in some of the data and digitization in our valuation workflow, in our alternative to title insurance. By the way, that's like three companies represent $30 billion of market cap, huge opportunity to reduce cost to homeowners there and iterate as innovation in that marketplace. But some of what we do is really opportunistic. It's the time is now. And so one of our challenges is, we see that we can double revenue year over year. The question is, maybe do we need to triple it? In other words, we are hiring and culling and adding programmers. We're building technology and developing. And so to me, life is a zero-sum game. There's so much time. And really, I think, what's going to be one of our challenges is, can we capture these opportunities quickly enough? Some of them we have, like I said, we have walls and moats around the opportunity and for long term, but other is first mover advantage and really want to be mindful in certain micro spaces in our company where we can get that and get it done. I can keep going down the questions, Martin, at this time, or I can turn it back to you, however you'd like to do it.
I'd like to I'll lob some of my questions as well as some of the audience questions at you. There is a question about your margins and so forth, and I'd like to dig into that a little bit. One of the things I think that's, and if I've got this right, like when you capture and collect data in one of your silos of business, it has applicability to the other silos, correct? So you and with your margins, the biggest expense is kind of a fixed cost base. So as you get higher volumes, your margins increase.
That's correct.
And as well, you're both a SaaS and a transactional business. Some guys will be paying you $20 a year or a month or whatever it is. Other times when a house closes a transaction, you're going to get a transaction fee on that. Could you discuss, I threw a lot out there, but discuss about how the information is levered across your different businesses and the transactional revenue versus along the SaaS business.
So Jim, I'm thinking that I want to give like a macro again and then to get you into the micro.
Sure.
The macro is this, is that when we bought the valuation businesses, it's, because it's based on old archaic platforms, the margins are terrible, like the 30% margin business, 25 to 30%. But what we're doing is we're basically integrating the ANOW platform into the valuation. We'll be able to reduce the staff by 75%, and we'll be able to bring our margins up from that 30% to north of 70% margins. And so it's a process where, we basically acquire the business, acquire the master service contracts, bring in our technology and increase gross margins. So that's what we're doing on the valuation side. On the tax side, it's basically, pure margin, like pure profit business. We're north of 90%, north of 95%. We've already paid for the data. All of our algorithms have already been tried, tested, and proven, and they're working. So it's just basically putting them on the platform and allowing both the consumers, and the businesses to participate. We do know that we're going to get tremendous uptick on this. We haven't talked to a lender yet that we brought the platform to that said no. They're all waiting for it. I haven't met a consumer yet that says, hey, you know what? I've got it all figured out. Not interested to know what my largest expense is and whether it's fair or not. I mean, it's just an easy. And the most important thing is that no one is offering it. And it's not as simple as value times tax rate. It's much more in depth. And tell me something, and anybody that on the planet that has accessibility to data that we have and has the property tax consultancy experience have been through the wars of assessment appeals, and marrying those two together. It's the most simplest form of business it is, but the most complex. And it's just an absolute tremendous opportunity for us. And we very systematically put these businesses together. On Jim's business, title, again, Jimmy, I'm going to pass to you, but right now, title as far as margins are not great. But with what you're going to add with AOL and the technology that you've built with your clearinghouse, with your call center, and that you expect to be north of 60% by the end of 2022 as well. Maybe you can elaborate.
Yes. Well, yeah. And I think, look, I always go back to this. A couple of points. One, with the title business, you can be between 45 and 55% gross margin, but ultimately, what we've done is create an encrypted environment that ingests data in such a way and digitizes the imagery and the data that comes into that to allow for rapid decision making, and do so uniquely in the title insurance industry so that it takes it outside of the current regulatory schema so that it can be priced more effectively and consistently in conjunction with actual transactional risk. I know that's a lot of words, but what it means is it's a technology base. And it's something that Voxtur will have the ability to expand to settlement agents all across the country or escrow agents across the country, depending on your jurisdiction, and allow them to function in this environment. And we'll charge for the environment, and that's an 80% plus margin environment. So I always look back at, people ask us, hey, do you want, would you get out of this business, or do you want to sell us one of these tech-enabled services business? And I said, no, I'm not going to sell my lab. The laboratory may do the routine blood work, okay? But it's also working on next generation solutions. It's also, it's allowing us to be very close to the regulatory environment, the transactional environment, the interoperability of databases, the nature of data ingestion. Like, I'm not going to get rid of those. They will become less and less and less a percentage of total revenue. So the higher margin technologies will proliferate and be the predominant part of that. And you'll see, in addition to the top line revenue growth doubling, you'll see the increase of the margin again, concomitant with the technologies being a greater proportion of the overall revenue. But there'll always be some small piece of revenue that is, transactional in nature, at least in the foreseeable future, in these businesses, because again, that's our laboratory. That's where we determine inefficiencies. That's where we address inefficiencies. That's where we create new ideas. That's how these ideas were created. That's some of the beauty of on the benefit of Voxtur.
So Jim, if you don't mind, I'd like to be able to whip through these questions because it's really, really important that our listeners, get a response to this. And to the extent there's some elaborations needed, we'll deal with it. But I'm just going to go in the order that I have right now. And it says, how well is the integration of acquired companies' technologies going? Which is, it's famous because we're going to have one data lake with all of this data in here, and the integration is just phenomenal. Does Voxtur need more technical staff for this? Let me answer it this way. What technology company do you know has enough programmers, in their companies? What happened 3 years ago where I could buy a programmer for $70,000 a year? That same guy now, instead of working in London, Ontario, Canada, he's working for a company in London, England, and generating $150,000 to $200,000 a year. However, because of who we are, the diversity that we offer, the growth that we're having, like 350% year over year, we're going to have triple-digit growth continuing. Yes, we need more technical staff. We'll have offers on the board every day, but certainly there's no question that as we bring in more staffing, which is more the professional programmers, margins are going to increase because all of the legwork is done. And most of these technical people are just for customizations for specific clients. So big time margin increases as well. The second question says, guys and greetings from Europe. In your opinion, what are the biggest risks? I think Jimmy dealt with that already. Nathan Saylor says, what is the benefit of the data being in a blockchain? Well, what I like to say is we're going to put our data in an encrypted private distributed ledger. How's that? Whether you want to call it blockchain or whether you want to call it private distributed ledger, we're protecting the data because that's what our clients need. It needs to be protected, right? It needs to make sure that, you know, someone doesn't come in and has access to that proprietary private data. Obviously, the blockchain is a really, really interesting endeavor going forward. Can you imagine being able to take the data that we have, because we're building a more comprehensive database than anybody, to be able to not only take the physical characteristics and the sales, to have the taxes, what they are and what they should be, to have title, which Jim's, you know, team can put together. But what about putting in, you know, the property inspection reports, the insurance, the mortgages, you know, all of the various companies? Wouldn't that be great someday to be able to put that in a ball and call it a token, and to be able to work in the blockchain in that environment? But as everyone knows today, none of the banks, you know, in North America right now are truly acknowledging, you know, Bitcoin and Ether. However, doing it the way we're doing it will allow for an easy transition. We'll be the first, you know, mover, you know, into that space. You know, we're going to be, you know, kind of the Carfax, as you know, we're going to be the Refax, the real estate, you know, company in North America. So blockchain, we believe, will have a large component and place in the future. We're going to move, you know, as the world moves with that. It says, why are you risking cannibalization of B2B offerings by entering B2C in the same space? We're not risking it. Not everybody has a mortgage. Not everyone has a conventional mortgage. The B2B are dealing with their fiduciary responsibilities and making sure, and as trustees, to making sure that the payments that they're making on their behalf is right. But not everyone is relying on the lenders to be able to take care of that. I don't know anyone that you know, would not be willing to spend less than the cost of a Domino's pizza every year to make sure that they take, you know, the bull by the horns themselves and spend the $19 and make sure that every year your largest expense after mortgage service is being taken care of. It's not a conflict, you know, it's not a cannibalization. What we're making sure is that everybody has an opportunity to make sure that they can have this reviewed, you know, and, you know, whether some decide it's being done by the lender, that's fine. I don't know too many people that that basically think that $20 is a deterrent and it's too much money, so we don't want to make sure that it's done twice. So there's no cannibalization on that.
Right. As opposed to cannibalization, it's more like you're using the same data and selling it twice to different people, right? That's
three times.
Three times.
It's called repurposing the data. It's what we do best. And that's what we're doing in our asset management platform. It's what we do in our imaging platform. We sell our imagery to the real estate boards. We sell our imagery to the governments. And then we turn around and sell the imagery to the insurance adjustment people. What we're doing on our asset management, well, each individual business is making money on its own. We're culminating that together on an asset management platform and going to get paid for it again. So it's not cannibalization, it's the opposite of cannibalization. It's giving the opportunity that anyone that wants to have access to it can. What does it say? What does cash flow look like? Everyone thinks a raise is coming. I think that from Jim and I's perspective, you know, we're on the Toronto Venture Exchange. I know there's a question later that's asking. We're going to move to NASDAQ. We're going to move to NASDAQ, you know, as soon as we can. It looks like the end of the first quarter, first or second quarter. We think that it's hard for the average investor on the venture exchange to truly understand the technology that we're offering, the depth and breadth and the innovation that's being taken care of here. You know, and it's not just an idea. You know, we went from 10 million to 100 million of revenue in over the course of a year and a half. We went from that 100 million will be, you know, triple digits again next year and the year after. This is a massive growth technology-based business that you will also see high margins. If you take a look at technology, take a look at SaaS, there's a number of questions you need to answer. Number one, you take a look at the cost of acquiring a client. Well, guess what? Our salespeople go in and they sell tax, valuation, title and settlement services, and asset management all to the same client. All right, so our cost of acquiring a client is low compared to other companies. You look at churn, we're not losing anything. All we're doing is getting new clients every day in massive amounts. There's no churn. You look at gross margins. Well, right now we're around the 40% mark. We were at 47, 48, but with acquiring Zone, it's taken a step back to go 3 steps forward. But you will see over the quarters to come that by the end of 2022, we'll be north of 60%, and certainly halfway to 2023 we'll be north of 70 to 75%. Just continue to watch. You'll see the gross margins improving dramatically because we are a technology company. Again, you look at the sales growth, we're triple digit growth year over year, quarter over quarter is going famously. We've got the new offerings that we're having that's not even into the prognostications, but we do know that that business will at a minimum will be doubled year over year just for the business we already have in hand. So quite frankly, there's not one aspect of defining what SaaS is that we don't touch. So it's ridiculous right now because what we're going to do in 2022, we're getting like a 2 times multiplier where SaaS companies are getting as high as 20 times. And it's why we got to get off this exchange and get it into the hands of people that truly understand the depth and breadth of what we're offering, the technology innovation that we're offering to the industry. We know it's going to be accepted by our clients. We just need, the investors to also get the returns they need and get the world to know exactly what we're doing. So we need to spend more money, on marketing and branding and in getting our name out there. And that will come as we mature with the company. But, we're pretty happy with that. But back to the cash flow, listen, we think it's more important to get strategic investors, people that understand our business, people that can support our business. You do need retail to, to continue to get, the churn and the sales going all the time. The liquidation in the marketplace is good for all investors. We are going to make some money in the fourth quarter. We're going to make a lot of money in 2022. It's not the biggest concern we have on cash flow, but we continue to invest in people and we continue to invest, in technology, and certainly going on NASDAQ is not a small feat, for, a smaller company. So we always certainly will need some more money at some point in time, but we want to be very selective on who are those investors. That's important to us. We're not as excited about someone that comes in on a typical small cap company and comes in at 10 cents and wants to turn around and sell it in 2 months because it's at 20 cents. We like people to understand. We like people to respect and appreciate. We want to give them magnificent returns. We want to run a business with integrity and professionalism. And we think it's just a nice balance to have a little bit of everything in there.
Gary, on the last quarterly conference call, I believe you mentioned that at around $40 million of revenue a quarter, you're making good EBITDA at those levels. Did I get that right? And does that kind of imply let's say your break-even EBITDA is around 35 million-ish a quarter?
Yeah, I think it's close. And what's the definition of good? I mean, for me, if we're doing 200 million of sales, and I'm doing 60 million of EBITDA. Am I, dancing in the streets? No. Am I happy, that we've become that responsible, profitable company that is technology that continues to grow revenue and have that? Of course, I don't think you're far off. A lot depends on what, how further we go into investing in technology and continuing to advance our cause and being that leading, entrepreneurial real estate technology company. So there's lots of things that could alter that. But if it was the status quo and stayed put, you're probably not far off. I got a question here. What keeps you up at night? What do you see the biggest obstacle to success? Do you see Voxtur integrating blockchain technology? I think I've dealt with that, or have you already? Listen, Jim and I have put our own, lots of our own. Jim, everything. He didn't take a penny of cash out of this when he moved his business over and has millions into it just to get this company from basically almost bankruptcy to a real company. I put $3 million on my own, continue to invest on the company. We're into this company large. We're very proud of what we do. And what keeps me up is that I want to continue to grow. I want to continue to be profitable. I want to make sure that I continue to honor the shareholders that have the trust and faith that invest in us. I never ever take things for granted. You can't replace hard work. You cannot replace hard work. We have to be the hardest working people on the street, and we got to continue to be innovative. They're two good qualities to have. But, as I say, I mean, being in the Toronto Venture Exchange, is a bit of an ulcer creator because sometimes, for example, we raised some money last year at 70 cents. I think we were tracking 50 million of revenue, went up to like $1.25. We doubled our revenue and the stock's at 90 cents or 95 cents or $1. We're so much farther ahead, yet the market doesn't always equate to reality. That can be troublesome, but I think that you just have to know that the environment you're in, we're making the positive steps forward. We're putting our big boy pants on and moving to the US exchange in the new year. It's all part of a growing process. The good thing, I think, for the investors is that, both Jimmy and I have been there and done it. We're very experienced, seasoned, real estate entrepreneurs and leaders in the public space. I've got a blue chip board. The board that we have, and it's not cheap to have these guys, but it's all of the members of our board, the former head, head of Ginnie Mae, the former premier of the province of Ontario, vice chairman of the Bank of Montreal, vice chairman of National Bank, the chief of staff for Flagstar, the former head of mortgaging for BlackRock. These are all really, really senior, currently staying involved people in the business that can do nothing but help and provide mentorship. And it takes a village to raise your children, and it takes really, really good minds to continue to improve your business. Is the IA Industrial Alliance report revenue forecast high? We don't believe so. We think that, I would be, I'm very confident that we'll get there. Would I like to exceed it? Of course. I mean, that forecast doesn't include some of the new business offerings. So, I very, very selfishly believe that we're much better than the report says. And then contrarian, you've got the 8 Capital. Well, you got Christian Scrow, who is providing that. He's a really good guy. He takes it very serious. He works really hard. He's new in the industry, and it's really, really difficult for an analyst to step outside the box. So why would he give us a 6 multiplier, which is the same as Real Matters or an Altus? We're basically boots on the ground company. That's what they are. Their technology is minimal, right? And yet they're giving us that multiplier. And of course, that puts us at $1.5 billion to $2 billion based on a 6 multiplier, of which we're substantively lower than that today. But it takes a lot of courage for someone to say, hey, they really are a SaaS-based company. We don't really have to look at real estate companies as comps. We should be looking at SaaS-based companies at comps, which if you read the SEG report, the Segregated Equity Group, it gives you a full comprehension of what software as a service is, of what those type of companies and what kind of multipliers they get. So I just think that, depending upon how seasoned the person is in providing coverage, how convicted they are, how much conviction they give to what they truly believe. There's politics and there's limitations that everyone wants to make sure that we overachieve and they underscore because it makes them look better as opposed to the other way. These are all personal things, but I think that in the fulfillment of time, these are smart people, they're good people, we respect them, and they're going to give us ultimately the valuation we need as time comes through. Jimmy, do you want to talk about the attorney opinion letter?
Sure, I'll talk about it. Yeah. So when I was talking earlier about the laboratory, about the title and settlement services business, and that's the tech-enabled business. It runs on several different platforms. We ingest data directly from courthouses. We ingest data from third-party sources, and after mining the data, we normalize it, validate it, and you can turn an opinion on title almost instantaneously. So there's been a lot of efficiencies built in the settlement process for people to transact real estate, and certainly in culling that information and providing it to third-party lenders and servicers. The rate structure that's created throughout the United States, in many states, is promulgated, or it's very high. States like California, Florida, Texas, New York, New Jersey, Pennsylvania, Illinois, other places, and so if you provide traditional your standard title insurance, then you are governed within that standard title insurance industry and that rate structure. So what we did was create and file a process patent around an alternative to that. And in so doing, we had to create a technology that could build scale for those transactions to happen with great certainty. Obviously, if you're going to be backed by the top insurance companies in the country, AM Best A rated, you had to have data integrity proven, which we did. And we created this architecture this technology to allow people to go in and create an alternative that's outside the rate schema and really give them freedom of pricing based on our technology, our SaaS. And I want to be clear, the SaaS is both subscription and usage based. And the nice thing about that, and if I go back to some of the white papers that have been out in the industry recently talking about SaaS, the usage based SaaS, right? That's every bit as relevant. That's why I go and I use Snowflake. Most people have heard of Snowflake. They get it, and it's that usage fee SaaS model that is starting to proliferate, that a larger and larger percentage of SaaS companies are going to it. Why? It's that ability to go in. It's a low barrier to entry to contract with a counterparty because they know that it's going to be a variable cost. It's based on their success, and people always like to align expenses with their success, right? And so Voxtur, in many things that we do, align our success with customer success, and the net margin of the net next order margin is close to 100% in many of our products and services. So because we've already paid and deployed in other business units the cost of the data or the tech development, et cetera. So that's what we're looking at, and that's kind of how we see the deployment of our next generation title solution.
Great, thanks, Jim.
Yep.
There's a question here on covenant breach. Has it been sorted out? Has it been corrected? So I think it's important to give some context to this. I've got a relationship with the Bank of Montreal that goes back to 2004 when I took Altus public. We probably put $500 million in their pocket over the years. They're tremendous clients. They're tremendous. Bank for us. We think that we're the only venture company that the Class A1 bank has brought into the fold. They're also been lead investors in everything that we raise. Everything that we do is in concert with them. So before we went into breach, we basically said to them, we need to invest here, we need to invest there, we need to do this, we need to do that. It's going to put us offside. Can we, this is what we want to do. Are you in? So the bank has been fully supportive as 100%. As you know, when you report on a quarterly basis, you have to report the condition at the time that you're reporting. But what it's not saying is that even though we were technically in breach, it was already agreed to that the bank has allowed us to grow. The bank is going to be there to support us. They're going to continue to be there to support us. We're already in talks with them for them to be acting as sponsors for us on NASDAQ. We got a tremendous relationship, and it was never an issue of us going into covenants without their support. So yes, everything is behind us. And, if we want to invest in other things and it falls outside, we'll go to them first. And, and if they allow it, we'll do it. And if they don't allow it, we won't do it. But they're very, very good partners. Show me a really, really successful company. And aside from really important investors, you also need a bank behind you too. And our relationship with the bank from the senior executives on down is second to none. We just love the relationship that we have with them. It says UWN, United Wholesale, wasn't announced, or all clients not going to be announced. This is really like we would not use United Wholesale to announce it. We're not allowed to announce it. Our clients do not want us to announce it. We have to be somewhat circuitous, and by saying a top 3 lender, a top 4 lender, it just seems to be the nature of the beast. The only reason UWN was brought up is because it was brought up by you, the investors. And the only reason you found out is that when you went to their website, you found that there's appraisal direct, it automatically directed to us. So, we don't talk about specifically who the clients are. We do know that we have, over a couple hundred, I don't know, maybe 300, Jim, I don't know exactly, master service agreements in place with the top lenders, in North America. And it just seems to be the nature that most of our clients want us to have our heads down, work, and not use them as, as promotion for our growing of the company.
Yeah, I'd agree with that.
Before me, right?
I agree with that, both on the numbers there. Yeah, I mean, the fact that we have the 300 master services agreements, we didn't talk about that in the call earlier, but those are key agreements often given as a result of an RFI or an RFP, request for information, or request for proposal process. And I want you to understand like that those are gold to this organization. Those agreements allow us to create organic growth, to land and expand, to take one product or service where we go in and then expand it to others. We've already done it with multiple tier 1 banks, tier 2 banks, other financial institutions where we've provided, we provide the tech-enabled service, and then we go in and we provide the technology. Mr. Cooper might be an example. But so there are many examples of how that proliferates, and the clients are extremely sensitive on reputational risk. And derivative risk, and then there's governmental risk based on the nature and the vim and vigor that certain governmental enterprises or entities are going to use to regulate the financial institution. So there are lots of sensitivity around some of it. Believe me, we can talk about these things like we just did, UWM, et cetera, or the Zome acquisition from Mr. Cooper. We can talk about it, but some of it, when it comes down to press, that's where they get really sensitive. And so, you as investors, we're going to do next year a news feed on our website. So you'll get more up-to-date news. But again, some of it, there's 2 things. There's the sensitivities of our clients, and there's also, a lot of the vision that Gary just explained to you that we can explain now and describe to you. We didn't want to do earlier. It's not that we want to keep anybody in the dark, except our competitors, right? And so we have to be thoughtful about what's released, when it's released, how it's released, when we are changing, like going direct to the appraiser, changing a marketplace, like a complete model, creating new efficiencies, and having a first mover advantage. We want to be able to take care of that, and we want to do that for all of us as investors. And I own over 20% of the company myself, so I'm very hyper focused on being able to preserve our shareholder equity and building that and taking advantage of some of this first advantage that we have right now, first mover advantage. And you heard Gary talk about it, and I echo all of the same thoughts.
Yeah, it said we talked about new clients are going to be announced in Q2. Nothing has been announced. Are there any clients that will be announced? Well, I think we did answer the last half. As far as new clients, we're putting new clients in all the time. Don't be surprised in 2022, at some point during the year, that we'll be able to tell you that 60% or more of all appraisers in the United States will be using our digitized workflow platform. That's how significant that platform is. That's how revolutionary that platform is. We may not be able to announce the clients, but I will tell you that our market share on our digitized workflow will be massive.
Gary, sorry, just
yes.
a quick question. On your last conference call, going back to then that as well, you talked about the potential of announcing JV partnerships possibly, or a strategic partnerships. Could you, in a sort of a broad sense, what kinds of JVs or strategic alliances would they?
Yeah, let's put it in a simplistic way. They're the clients will white label our product and they'll use our architectural platform.
All right.
So there'll be a revenue split, and we'll do that with a number of clients in 2000. See, it's not so much like we like to be kingmakers rather than kings. it's really, really nice for us to be able to kind of white label our platforms, let them use it, let our clients promote themselves, let them grow their revenue, and let them be very, very happy with the quality of technology that we're offering. We don't feel that it's not necessary to have our name in front of everything. What we do feel is really, really necessary that you look at our revenues and you look at our profits and you become very happy with that. And I think that that'll take care of itself.
I would think the B2C like tax product, that would be a great one potentially, because you don't have to hunt for the consumers. You get someone who's already got a lot of consumer contact and do something like that.
Well, think about this, just one example of it. One example might be a client like Wells Fargo or Bank of America or some other financial institution where we already provide a technology solution to them. So we already have a master services agreement in place, and they already have, thousands, tens of thousands, hundreds of thousands, depending on the size of the bank, of consumers flowing through there. And now they have an extra product or service they can offer them directly, but they can also run on their portfolio wherein they handle the escrows. So one client already being called upon, already deployed, and now you touch, from the smallest to the largest financial institution, you can touch thousands of people. Same thing through the settlement agents around the country with fewer transactions, right? The transactions get constrained as the rates go up. There are fewer refinances, etc. So what do you see with that? You look at it, you say, oh wow, wait a second. Voxtur's uncovered data that it's verified, tax data. I need more transactional revenue. I need a product and service that's essential. How many new products are essential in the settlement and title business? None in the past, 20 years. Voxtur has one. You go to the title companies that are also familiar with us that are doing, other tens of thousands of transactions. You layer this in, they sell it, they mark it up, and here we are. We've just touched, another 1,000, 5,000, 10,000 transactions a month, times $20. I mean, and we sold one client. So like very few clients can be representative of a very large number of consumers, both monthly and annually.
Jimmy, it says we lost 20 million year to date, actual burn. Will that be lower on a go forward base? Of course it will. I mean, we're going to be profitable in 2022. That turn is taking place in the fourth quarter right now. So I'm very, very confident, with respect to our profitability going forward. When you're starting a business and you're building it, you have to accept this. This is an inevitable that you have to basically build your infrastructure and then work into getting the returns from that. And that's exactly what's happened.
Gary, when you say profitable, do you mean that on an EBITDA basis or on a pure net income basis?
Both.
Yeah, because this year, you're looking at, could be positive EBITDA for the year, and certainly an increase in Q4 over Q3 on all the revenue measures, so top line revenue and bottom line revenue. So expect to see that. But you're right, we're investing heavily in, and have invested even probably more than we expected at the beginning of the year. Obviously, we beat the top line revenue estimate, but we put a lot of people, a lot of developers, like we talked about it, building a lot of tech infrastructure, putting together our data. I call it the data mesh, which is really a series of data lakes, and creating that architecture and bringing in that expertise. So there was a lot done from an infrastructure perspective and investment perspective in our technology to allow for the growth that everybody's seeking.
Yeah. I'm not sure what this question, what it refers to. It says,
I love this one. It's because because behind Martin, I noticed this is a rocket. And I don't know if it's because he says, well, wait a second, investors, this isn't rocket science, right? But if you want rocket science, here it is. Or maybe
it's a rocket ship. Maybe
it's a rocket ship.
Right.
No. Yeah, that's probably what that question is.
All right.
There's another question about integration with Fannie Mae.
Yes.
I mean, Jimmy, maybe you're much closer to that, but listen, we use Fannie Mae for everything, and Fannie Mae approval and everything we do is important. So, and you're working closely with them, Jimmy. So maybe you want to just talk about the relationship with Fannie.
Yeah, I've had a relationship with Fannie over 20 years in various capacities, providing legal guidance, support, selling products or services to Fannie Mae. Fannie Mae standards are written in documents known as pooling and servicing agreements. Those pooling and servicing agreements regulate how securities are managed and traded. And Fannie Mae then sets the bingo as well on a wide swath of loans that originated in the country. So where Fannie Mae will be part of pooling and servicing agreements and also lending standards, they are the standard bearer throughout the industry, even more so than Freddie or Ginnie. So you look to Fannie Mae standards oftentimes based on what you're doing, depending on if it's a technology service in the defaulted space, which we didn't talk about at all in this call, but it's been dormant for the past 2.5, 3 years. That's going to take flight at the beginning of next year with the moratorium burning off. That's a hidden gem inside Voxtur. We didn't even talk about it. We haven't gotten there, but I just bring it up now because Fannie Mae sets the bingo and the rate structure for many products and services in the default arena, and that's going to begin again in 2022. But yes, everything we do that serves the lending ecosystem, we have an eye on the Fannie Mae products and standards.
Question: if the breach was fixed, why didn't you press release? It's kind of a double entendre, isn't it? I mean, you put it out there and say, "Look at us, we're no longer in breach." We knew it was never a material issue to begin with. Putting it out there, some people might say, "Well, what? You were in breach? What's going on?"
Right.
So, quite frankly, it's fixed. It's over. I'm not.
It was in the financial statements. Look,
Yeah.
and so we do put it out there. We do, in air quotes, press release it. But to Gary's point, we don't shout it from the highest mountain. When we talk to BMO, and think about this, this bank they're a material investor. Their investor, that side of their house invests in our raises. The bank is investing in our raises, and we're borrowing. And so Gary's worked with this bank and created hundreds of millions of dollars of value for BMO Harris over the course of its history. They've been extremely responsive. They're really great advisors to the management team. We work hand in glove with them. We have some really nice standards with them where we can borrow like up to 3 times EBIT to acquire companies. So we have great flexibility in our terms. We grew quicker than we even thought, and we grew differently than when we thought. If you go back to January of 2021, and so you do like any good steward does. We didn't let the bank find out. We went to the bank. We said, "Hey, bank, this is how we grew. This is how it was different and deviated. We're actually growing faster. Do you want me to slow down the growth and throttle it, or should I go ahead and continue to invest in this technology and build this billion-dollar company quicker?" Bank said, "Jim, go build billions. And we'll modify it to your needs. What do you think you need? This is what we're doing." And really, they've been hand in glove with us ever since we started with BMO Harris. Really been fantastic partners.
It says, "Can you do a formal business update from the company, like a conference call?" We've been doing lots of these, so we'll do whatever the interested investors or existing investors want. We'll certainly do whatever is needed. That is, we are prepared to go on the mountaintop and talk about our business.
Yes.
It says BMO will extend the debt or increase it. That will help be abating raising. Listen, that's what I built Altus on, is using debt as a weapon. Debt is a really, really important part of the business. It keeps you from diluting the business. Right now, in increasing that debt is a little bit more difficult in my eyes until that quarter's turned and we're making the money that we want to make, and then we have that flexibility. Not a lot of financial institutions want to give you in perpetuity debt that is exceeds 3 times EBITDA. So we're real close to having the corner turned and having a lot of flexibility with debt, and so we will use that because we are confident in our profits going forward. We thought about it, but haven't had the need to go to BMO right now, and so we change it right now. I just want to get the corner turned. It's within our sight lines of this corner being turned, and then you'll see a different, certainly a different financial representation with BMO in 2022 as we go forward.
I like the next one. The internet sleuths have found Annie Mac. Okay. Well, we're not trying to be. Look, we're not we don't want to be secretive about, and we're not secretive. These are public filings. That's why the internet sleuths are so good. When we do a joint venture with a financial institution, that's a settlement title closing joint venture with AnnieMac, where we provide those solutions and can share profits with them and help them grow the business. Other things that we're very fortunate with AnnieMac, and they're looking at where they provide some fix and flip financing using our alternative to title insurance is going to save them, I don't know, $2,000 on average a transaction. So the question is, it really comes down to AnnieMac standards on public announcements, how they want to do the joint venture, and do they want to keep this as secret sauce? Remember, they're a lending institution and they have secret sauce, right? And if we can reduce the cost for them from maybe some local competitors, they may not want to announce it. They might want to just keep the secret sauce and get more business in the short term and not announce it. So there are legal reasons, there are compliance reasons, and then there are competitive reasons for not announcing. But we're happy. We like internet sleuth away, find out where else Voxtur is, and as you bring it up, we cannot deny it. That is a joint venture we formed with AnnieMac.
The next question is about us, purporting to be kind of closed mouth in supporting the narrative as far as what we're going to be. It's a tough one. So I'm on at least 20 investor calls a week, 20. In addition to that, we have hired Paradox, we have hired North Ventures, we have hired a market maker, we have hired James West, we have hired Arrowhead. These are all, investing firms that are out there and crying from the mountaintop and telling everyone who we are and what we are. And because of that, I'm doing 20. Jim and I are doing at least 20 every week. There's not an interview that we're turning down. There's not an opportunity as far as a conference goes to tell everyone what we're doing. We spent $500,000 with a top of the line, top shelf marketing company called King Ursa. I spent 3 hours there this morning because we're going to be integrating a marketing person that will act as that go-to person within our company to interact with them to make sure that our branding, our messaging, our marketing, both external and internal, is being done in a proficient way. We're doing our best. We're working our ass off. And I hope that you won't have to ask this question, 6 months from now, that we're going to be out there enough so that you don't, feel that there's a need that, that we're not being known well enough. We are guilty in not going out there in a big time prior to the last 6 months of this year. Because, quite frankly, what you want to do is you want to be less talk and more action. You want to start delivering. We're delivering now, and I feel like I can get out there in a positive way and demonstrate through examples. Our business is more like a verb and not a noun. I'm really proud of where we're going and what we're going to do. And hopefully everyone that is doing the talking, all you have to do is go to our balance sheet, and there's your answer. Jimmy has talked about AOL. How big is it going to be, Jimmy? Well, how many transactions, are there in a year? Origination, how many million? How many refis? How many bankruptcies? How many, defaults? You're talking.
You're talking. Yeah. Well, yeah. I think if you were to capture them all, you're talking billions of dollars, and at an 80% margin. That's what you're really talking about. Look at all of those different providers that provide title insurance around the country and what they do, and the number of transactions. If there's a 1.1 million refinances or real estate transactions monthly, and you think, okay, if you charged a couple $100, $250, and it was 80%. So it was $190. Let's call it $200 of profit on each transaction. You do the math. It gets to be pretty big, pretty fast, and certainly it's going to be extremely compelling in all of those electoral states I just mentioned. I think you could win a presidency if you captured all of those different states. How you capture Texas, Florida, California, and New York all in the same, you'll have to figure that out. We'll have to have a centrist, but politics aside, I think it could be. There's a tremendous addressable market, lots of opportunity, and and really, and there's a lot of it, good. We talk about some of the, some of the reason for being a Voxtur. It's the verified data, giving you transactional clarity, creating those efficiencies. Those efficiencies translate to cost reductions and investor higher returns. So the cost reduction to consumers, those people, those veterans getting VA loans, first-time home buyers, or even private net wealth, people, all along the watchtower, all of those different constituents reduce their transactional costs substantially, puts money in their pocket. It increases home ownership in the U.S., which is an important initiative for us. So Voxtur stands behind that premise that we're going to be more transparent, and we're going to create transparency and efficiency and inclusivity. We're going to increase housing in the U.S. And it's you might think it's a little soapboxy, but I've seen it firsthand in my own family. I've seen how it affects people up close and personal, and I think we have the opportunity to change some of that paradigm for homeowners in general, and that's going to resonate with our investors. They can feel good about their investment, not only for the return, but for what we're actually doing in the economy and what we're doing for property transactions.
I'm just trying to move through this quickly. It says that another sleuth, Antoine, found that he saw on the internet that JP Morgan is hiring appraisal direct. Like staff, confirm or deny. I don't know that answer. And I don't know if you do, Jim, but Antoine, we'll try and get back to you. It's moving. Things are moving really fast. But it says, Marty, maybe do you have any comment on that?
On which one? Sorry.
On that something about JP Morgan. I thought you came in on and said
no.
something.
Sorry, I cleaned it out of there. No, I have no comment.
Yeah. Okay. And it says that some other entity claimed that we could do 400 million in 2022. Well, listen, we haven't incorporated any prognostications or built it into our budget for what the revenue is going to be in tax in 2022. We expect it to be frothy, but we've used that as a bogey. Same with our asset management platform. Same with Jim's AOL platform. So listen. I'd be disappointed if those didn't take off in wild abandon, but we're not going to go out there and say what we're going to do. We're just going to say that we're going to be in triple-digit growth and leave it at that and stay out of trouble in the capital markets.
Gary, I'd like on the foreclosure moratorium. Let's say it does. They wind that up at the end of December. What happens to your business at that point? Is that like sort of jet fuel to the business, or how long does it take for that to sort of impact you guys?
On Jimmy's side is because it's a huge tailwind. But Jimmy, why don't you just talk about what you did pre-moratorium and talk about the assets that you have that are dormant right now, like the clearinghouse and call center.
Yeah. So they, look. Prior to the moratoria going in place, you're looking at an $80 million business on its own. The technologies that we have that we created that are part of the Voxtur transaction didn't just include what we talked about, the data ingestion engine for the title piece and the title companies, et cetera. It included the bankruptcy connectivity between bankruptcy debtors, the bankruptcy trustees, the bankruptcy court, and the mortgage servicers. So the bankruptcy environment. So there's a top 5 bank that's deploying our bankruptcy environment right now. There's another top 5 servicer that's already using our bankruptcy environment. But of course, those have been dormant because without, the normal default flow, without the pressure, people don't have to look at options. If the house is free, it's free. So there are technologies that we deployed to manage default for a servicer that's out there that's been dormant. We have these bankruptcy and the clearinghouse, which has been dormant. And then the AI-enabled technology that it can answer consumer questions that layers on top of call center. That's nearly 100% margin, chatbot that really can talk to you in actually an auditory way, as well as a way where you can actually read the words and do it in that verbal format as well. So we've got some interesting artificial intelligence subdomain expertise to help consumers as they come into a call center. And that technology, Voxtur, we expect that to increase rapidly through Q1 and Q2. We expect to see the same thing with the bankruptcy environment. As the moratorium burn off, assets flow, our technology then manages and gives insights not only to the banks, but also the capital markets around the timing of distressed assets. And then the bankruptcy clearinghouse connects all of the dots and keeps the banks on sides as so when payments are posted, everybody knows about it instantaneously and it balances it out. So there's a lot of opportunity there for the Voxtur family of technologies once the moratorium comes off. And we're pretty excited about that too.
So guys, we are an hour and a half into this, my longest webinar yet.
Hey, we won.
yeah, hands down. This is highly entertaining and informative. So this is great. But I am getting close to kind of a hard stop here. So I don't know, maybe 5 more minutes to hit some more notes here. And then you guys are busy running some businesses here too. So.
Yeah, we do, but this is important. You know, the potential investors are extremely important. And, you know, I'll give all the time we need, but Martin, if you want to shut it down, certainly everyone has our email addresses. We're happy to deal with.
If you guys want to, maybe a couple more, handful more questions, and then we can wrap it up, maybe go through there and see what you think are the most profound.
Yeah.
Okay, real quick, smart contracts. I talked about the ability for us to take our each asset as a token, and that we're putting together. So smart contracts are in the picture in the long haul. All we're doing is moving along at the pace that the financial institutions will when they start acknowledging and you know, the use of Ether and Bitcoin, then allow us to you know, to move into these smart contracts and work you know, on the blockchain. So in the meantime, we're providing the same type of service, you know, as a private, you know, distributed ledger, using you know, using cash as currency, right? So that's what we're doing. Jimmy, do you have any comment on the MBS secondary market?
Yeah, I think I do have I can comment on the secondary market. Our data is extremely important to trading counterparties in the mortgage-backed securities marketplace. Not only the valuation data, but the title data. And I think when you parse through some of the words and heard what Gary was talking about on talking about the tokenization and the blockchain nature of a secured encrypted database that's end to end, it's really it's a live living asset. And the key data points are essential underpinning or essential foundation to building a mortgage-backed security. You got to have value. You want to know the consumer data. You want to have all of the servicing records there as you trade assets. So all of our key data elements are foundational, fundamental building blocks that are essential to the secondary market.
It talks about foreclosure, nowhere as big as AOL tax assessment. Foreclosure will be huge. AOL, you know, tax assessment is huge. If you want to look at it, no, honestly, it's absolutely, you can't really put it into context how significant this business is, how we're going to be first in the marketplace in this, how we have our proprietary algorithms in place to do this. You know, this is why we're so excited. And unfortunately, sometimes we get let down because we're not able to properly, you know, describe, you know, how significant it is ahead of us. So anyways, we're really excited in a lot of different ways. What else?
I think we hit most of it, Gary.
Yeah, there was one funny one about Dorian Gray, and the only thing I have to say about that is I don't know about Dorian, but I'm certainly getting the gray every day now and what we're going through. So that's kind of funny. I think that's it. I believe that, you know, our revenues are going to be substantive, and I know our success is going to be substantive, and I know that there's nothing that we take more serious than you as investors. You know, we've been down this road. We're not inexperienced, and we want you to have full trust and faith that, you know, you are extremely important to us, and we'll work extremely hard to make sure that this company, you know, is a first-class, large-cap success. So thank you very much.
I echo all of Gary's sentiments. Thank you, everybody, for attending the conference today.
Yeah, thanks. And this video will be posted on my YouTube channel, Radius Research, over the weekend. So if you haven't had enough, you can come back for it and watch some reruns of it. So Gary and Jim, thank you very much for taking so much time to talk with the investors. I don't know how anyone could say you're not spending time with investors after doing calls like this. So thank you very much, and all the best coming into the holiday season here. And we're looking forward to some good news flow next year. Thank you very much.
Thank you. Thank you, guys.
Thank
Bye-bye
you.
now.